Let's go up to Bank of India, which delivered its numbers. They are in conversation with my colleague Shefali Malik. Let's just go, not Shefali, sorry, Vishwanath Nair. Let's go across to that conversation.
If you notice, we have grown in very balanced way. We have reduced where it is to be reduced and we have grown where it is to be grown. For example, if you see the mortgage loan, we have reduced significantly. We have grown in housing loan particularly. And apart from RAM, we have also selected high-rated corporates. That is how we have grown in corporate sector as well. So we have been very selective and gone for high-rated corporates. So going forward also will be, because now we are back to profit and growth path. So we should definitely concentrate accordingly and go for quality. We'll be mindful about quality of asset and continue to grow accordingly.
Okay. Just a cursory look of the way your growth has panned out during the January-March quarter showed power as well as road and ports. These sectors have received a lot of credit during this quarter, especially within the infrastructure, umbrella. But trying to understand, there's a broad perception that these sectors are stressed. How are you selecting your accounts?
No, all sectors you have challenges. So you have to be very selective. Today, you can't say that particular sector is very much out of, but you have to be selective and you have to have your risk management system and you should go for right kind of mitigations. We have been very, very careful. We have set up our risk management accordingly. And in all sectors, we are going selectively with the right kind of track record, with right kind of potential cash flow and right kind of rating as on today and our experience with the customers. So all those things we have taken into account and we are very selectively growing.
Okay, fair enough. During the quarter, there was also about a 3,000 crore worth of slippages. Typically, where is the slippage coming from? Are these all largely just chunky accounts?
It's a mixed, some large and some smaller accounts. And we have taken all the accounts under discussion in press, so many accounts under discussion. We have also booked those assets in NPA. And in some of the accounts also proactively we have provided, knowing very well that going forward there will be stress. So we have proactively provided this time. So, and you may be knowing today we are already 76-77% covered our NPA books. And some of the big accounts going to be resolved very soon. And we'll be getting back around, right back to our profit in a good amount. That will also help us to grow.
Okay, so you said provisions about 77%, provision coverage ratio. Is this the level that you're comfortable with? Do you want to increase it any further?
No, we are always very proactive from very beginning. If you notice, not today, quarter on quarter we are increasing our coverage ratios. Not waiting for anybody to point out. We are today also, as I said, some of the accounts not NPA today, but we have provided accordingly, so that in future will not take the hit. So we are very proactive. Not today, even before RBI started, PCR, that asset quality review, some of the accounts we have already provided. So that is how I said some of the accounts, in NCLT accounts particularly, all the accounts 100% provided today. Asset RBI list 1, list 2, we have provided 100%. So that will help Bank of India to grow in future.
Okay, fair enough. In terms of your capital requirement, now you're about 14% on the capital adequacy ratio. Do you think you'll need more with the growth plan that you have in mind, or is this comfortable enough?
Because capital maximization is another issue we have focused from very beginning. If you notice during that PCA period also, when there are many constraints of capital and other constraints, but still you grew around 12%. So it's and as on today capital is more or less okay, but without that also we have grown 12%. So we have mapped our asset, we have changed the asset liability compositions so that we can grow even without capital during that time. So today we are more or less comfortable, and depending upon the macroeconomic development, we'll definitely seize the opportunity.
Okay, fair enough. In terms of your credit and deposit growth, what is the outlook like for FY20 now?
Today, we have already reached a level of 76% domestic CD ratio. And if the economy grows as per the estimate, and if macroeconomic conditions improves, I am quite hopeful with kind of asset quality, with kind of capital, with kind of our operating profit. I am quite hopeful that around 15% growth will be possible
on the credit side.
Credit side, yeah.
What about the deposit?
A deposit, this is all asset liability requirement. If you grow, and liability also, I will highlight one very big point. CASA, we have reached around 43-44%. It's a huge improvement from 39% to 44%. March 17, I remember it was 39% around. Now 44%, 43 point some, and around 44%. So that has been our focus to reduce the cost, and that will continue to be under our radar.
Lastly, this one account, Jet Airways, has been in conversation a lot in the press. We saw SBI announce that they've classified a large part of the account as NPA. Have you taken that step?
As I mentioned, though it is as per the recognition norm, it is not to be classified as NPA, but we have provided it proactively in that account also.
And what about IL&FS? What is your
provided? From the Q3 also provided, Q4 also provided, whatever they do.
Okay. What is the exposure there? Sorry.
IL&FS, we have 3,800 around exposures, and one IL&FS linked account also we have got decree from, resolution from NCLT. That money also I'm getting back in Q1.
And most of it is NPA now?
Most of the NPA, almost all the maybe 100 crores remaining, because payment is not issued in those asset-based account. But otherwise, almost all we have booked as per the RBI norms.